This is Dentist Money. Now, here's your host, Reese Harper.
Welcome to the Dentist Money Show, where we help dentists make smart financial decisions. I'm your host, Reese Harper, here with my trusty old co-host, Sir Ryan Isaac.
Also known as Crypto.
Sir Ryan Isaac, also known as Crypto, has invented a new currency for us to discuss today. He wishes he came up with it because he would be probably wealthier than he is right now.
Slightly. Not a ton, not a lot more. A little bit.
Today's episode starts with a surprising story about the history of the Netherlands.
Yeah.
I'd like you to tell this story because it's one that I know is dear to your heart.
Yeah, it's very near and dear, close to my heart.
You tell it a lot, but you keep changing
I change it up.
The tune about it.
So in the Netherlands, which you're very familiar with that region of the world, Q.
My grandparents are there. Are from there. I'm actually half Dutch.
See, you are?
Yeah.
Really?
Yeah.
No wonder. Now it all makes sense.
It makes a lot of sense. It's going to be a lot more emotional in the retelling of this tale. But in the Netherlands, in the early 1600s, you had this group of people, this class of people. A lot of them were scholars and what they called gentlemen botanists, right?
Yeah.
And they had these huge gardens. One was at the university, and then there was this other private garden from a guy named Carolus Clusius. He had this huge private garden.
Seems like a typical gentleman botanist.
Yeah, you know a few of those.
Yeah.
That's your crowd of people.
No, that's your neighborhood.
Yeah, that's true. So of particular interest in this garden was the tulip. You know, tulips had been around in gardens in Central Asia for hundreds of years, but they were brand new to Western Europe. And they were not just new, but they were seen as like really exotic and rare. And there were actually a lot of famous painters during that time who were painting things, and the highlight of their paintings were tulips. So tulips started to get a lot of, popularity. Everyone was getting really excited about tulips in the community. People would go to the gardens. They wanted these. Over the next few years, this group of people would start trading their tulip bulbs. So it went from being in a garden to, let's start getting these tulips in the hands of other people who can plant them in their gardens. And it started to kind of pick up some steam. Like, people were really excited about these tulips. Particularly, they loved these tulips that they later found actually was a disease. But at the time, all they knew is it caused this little stripe to be in the flower part, in the petal, right?
Okay.
So they loved these. They thought it was a rare tulip. Turned out to be a diseased tulip that couldn't actually grow.
Okay.
But that was the thing they prized most. So they start trading these things among each other for a few years. And it kind of gets to the point where there's quite a bit of excitement, and they're starting to pay for it. They're starting to not just trade their bulbs, but they're starting to sell it to people. It's getting outside of their network. Instead of being trading among each other, these botanists, it's like strangers that now want to buy tulips. If you fast forward like a decade, this tulip market, it becomes it's a famous
And
craze.
we're talking about like the 1600s.
Early 16, this is like 1630s.
Yeah.
It's now gotten to the point where it's now a market. People are paying very, very high amounts of money for these tulips. It starts where a handful of bulbs are getting close to the price of like a house.
Yeah, there was a quote that you found that I really liked from a historian. His name was Mike Dash, and he said, I think about the one bulb is what he was comparing.
Yeah, this is
to.
the peak. So he
At the
described
peak of the market.
Yes.
He said one bulb could be traded for, quote, the amount of money to feed, clothe, and house a whole Dutch family for half a lifetime, or sufficient to purchase one of the grandest homes on the most fashionable canal in Amsterdam for cash. That's kind of like your neighborhood.
Yeah.
Complete
Similar.
with a coach house and an 80-foot, or it's like an 80-foot garden. And this at a time when homes in that city were as expensive as property anywhere in the world. So, that was the like conversion rate of a tulip bulb.
Yeah.
Was like
A diseased one that actually wouldn't grow for very long.
The house that none of us will really be able to ever afford.
Yeah.
That's what you could get at the time.
And that was the important of that date was January of 1637. The funny thing is, in February of 1637, the market was gone. So that same bulb the next month was now worth a tenth of that, which is still probably pretty expensive.
So you're saying the next month,
30 days later.
After this big peak, the whole market just fell apart.
And historians, they think it just finally got to a place where people were going, okay, wait, a flower bulb for one of the most expensive estates on a river in Amsterdam?
Yeah.
Probably not worth it. And it ended. So it was this huge run-up and this big bubble of tulip craze, and then it just went away. And wealth was lost. People, lost money and bankruptcy. And
so really what happens is the demand just dropped. People decided at some point that tulip bulbs...
there was no value.
Didn't have a value, and that's what caused the...
Not a value of a house, anyway.
Yeah.
Yeah.
So today the correlation between this story is a topic that came up at a presentation I did this week at a dental school, where I usually start out dental school presentations with give me your top 10 questions about money and finance. Like, what are the things that are on your mind?
Yeah.
And multiple people in the top 10 asked, how do I get into Bitcoin?
Yeah.
Or what is Bitcoin?
What's that thing all about?
Is Bitcoin good? Should I do Bitcoin?
Yeah.
Now, this is a demographic issue. Some of you who might be further along in your practice may have never really heard of Bitcoin at all, or care what it is. But I think it's an important discussion to have. If you've heard about it, this will at least give you enough information to have an intelligent conversation with someone about Bitcoin, which I think is probably what most of you care about, is not being in the dark about this subject. And then this will also provide some context for investment advice. Like, how do you look at something like Bitcoin as an investable asset? Because as Ryan and I were just calculating prior to this podcast, even since we started writing this episode
10 days ago,
in 10 days, Bitcoin has gone up about 17%.
Yeah.
In 10 days.
Yeah. Which isn't even the steepest run.
No, and over the last year, in one year,
hundreds of percent,
it was trading for less than $1,000 a coin, and right now it's trading for $7,000.
It's just under $7,200 as of like
just under $7,200 as of today. Today's date being, what's today's date, Ryan?
November 8th.
Yeah, today's November 8th,
2017. November 9th, 2017.
November 9th.
Oh, yeah. You know how we know it's the 9th, by the way? It's Q's birthday.
Yeah. So, it is Q's birthday.
Balloons in the studio.
Happy birthday, Q.
Happy birthday. We're going to make you work longer today.
Ryan bought you a Bitcoin for your birthday.
Yeah, I did.
Awesome.
Yeah. $7,200 birthday present.
You guys are going to teach me if I should hold on to it.
Well,
yes, we'll get there.
I'd be a little cautious about the Bitcoin Ryan's going to give you. It's a physical coin. It may or may not be authentic.
It might have been written with a Sharpie.
He may or may not have minted it himself in his basement.
One of those flat machines at the zoo. You put your penny
we'll
in.
get into these details, but we want to start with kind of just talking about Bitcoin and explaining what it is. We're going to talk about how the process of creating it, a little bit about the pros and cons behind it, and famous people's opinions about it. So it'll be a really interesting episode.
It'll be fun one to talk about. So what is Bitcoin? The first thing to describe Bitcoin is it's a new class of currency that's referred to as cryptocurrency. There's it sounds like so mysterious when you say cryptocurrency. And if you're cool, by the way, I think you just say crypto.
Yep.
Right? You don't use currency.
I know, that's all I say.
Crypto. So
it's like last night I was watching a TV episode where Sylvester Stallone came on, and he said, "Just call me Sly."
What was that?
That's his nickname.
I know.
This Is Us.
Oh, okay.
He says his name is no longer Sylvester; it's just Sly. And I thought that's like crypto.
That's crypto.
It made me think exactly. That's how you. The difference is he's cool, and he is like whatever 80. No.
Yeah. So if you're in a room full of people, or you're at a party or the golf course, and everyone's talking about Bitcoin, just be the guy who says crypto.
Yeah.
Don't say cryptocurrency.
Yep.
Don't be the guy. So anyway, cryptocurrency. Now, Bitcoin is not the only cryptocurrency out there right now. Bitcoin is actually split into several different channels of the original. They call it forking, when they kind of fork off into a different direction. It's funny because as of this week, there was one of these channels, these split offs from Bitcoin that was supposed to launch, and they're just like, yeah, never mind, we're not going to do it. But people had bought it.
You mean there's different cryptocurrencies that kind of have deviated from Bitcoin?
Yeah.
And they're trying to create their own little market.
Some from Bitcoin, and then there's other ones that are totally independent of Bitcoin. Yeah. There's tons of them.
Yeah.
I mean, as of this year, I wrote this down. There's almost like 1,100 different cryptocurrencies in the world. Now, Bitcoin is the biggest. It has the most I don't know, popularity or momentum, or the most it costs the most. It's the most expensive cryptocurrency right now.
A lot of people think it's just virtual or online money, right?
Yeah.
But it's a lot different than that.
Yeah, well, that's where the term comes from. So the term cryptocurrency actually describes less about it being like a new coin or a new currency, and more about the process, which we'll talk about later. But the crypto part comes from the word cryptography, which that literally means the art of writing or solving codes. So it actually cryptocurrency has more to do with the system that tracks, kind of like the online ledger that tracks and records and validates all the transactions, than it does just that it's a new coin. So that's where the crypto comes from.
So that, you just gave us a lot. You gave us some really deep detail.
Yeah,
there.
we'll jump into that in a little bit.
So what you're saying is it's basically it's a currency. Bitcoin is that you can take your money and you can convert your money into a different currency, which is Bitcoin.
Yeah,
or you can find Bitcoin. You can discover it. Some people call it mining.
We'll get to that.
Okay.
Yeah. But I guess the point is, the reason why it's called cryptocurrency is because the system that it runs on, that's actually kind of like the more fascinating part for me. And a lot of people think this, and it's actually being implemented, this system. We'll talk about it later.
So technology that's actually pretty advanced.
Yeah, it's really, really cool, actually. So you kind of have, there's just two parts to this whole cryptocurrency thing. There's the currency itself, which is just online digital currency that's picking up a little bit more popularity. I mean, you can buy stuff with it now. Yeah. You can buy it and then sell it later and see if you made any money or lost any money.
Now, it was started in 2009, right? By someone or a group of people, but we're not really sure.
Known as Satoshi Nakamoto.
But we're not. That hasn't really been officially validated.
No. So in 2009, there was a person or a group of people, no one really knows for sure, called Satoshi Nakamoto.
Okay.
And the Satoshi person or company or whatever published a paper, that was called Bitcoin, a peer-to-peer electronic cash system, which is kind of what we were talking about before. When this launched, it wasn't just about here's a new currency to buy stuff online. It was here's a new system for tracking things, which we'll talk about in a little bit. But so it was in 2009. So the goal of this was basically to form a decentralized system with no regulating force. Like today, our currency has a centralized system. There's a regulating force.
There's a Federal Reserve that controls the currency, and the government makes rules around it.
And they're printed and they're stamped, and we know when they exchange hands and where every transaction goes through a bank or through currency. I mean, it's traceable. It can be, traced back to people and organizations. So one of the goals was that every person could now make, monetary transactions that were completely anonymous and without having a centralized system that was regulating all this stuff.
Yeah, and I've read that even though it is anonymous, and I've seen this in a ledger system. You can see. That's the interesting thing about Bitcoin is you can see everyone else's transactions.
Yeah, live in real time.
And so
you
know who's spending money. You just don't know who the person is, but they're all of the coins are linked to an account number, and you do know if that account number is spending money.
Yeah.
It's just there's some anonymity because there's no name with the account,
names,
but you do know that this account number is spending a lot of money or has done this transaction.
You can go to the website.
It's fairly transparent in that regard.
Yeah, it's totally transparent. Some people describe the whole system like a locker that's like like glass sides that you can see what's sitting in there and what's going in and out of this locker, but you can't actually get in there, and you don't know who it's assigned to.
Yeah, you don't know whose locker it is.
Yeah. So anyway, starts in 2009. it was worth in 2010 it was worth 1 penny. It was worth nothing, and it was kind of like the currency that criminals used.
Yeah.
Early on. I mean, that's really who adopted it.
There was some sketchy stuff.
Some sketchy characters there. I just actually finished this book about this online, basically illegal drugstore called the Silk Road, that was started by this guy named Ross Albrecht, this kid out of Texas, and one of the main reasons, and it ended up getting busted by the feds a few years ago. It was like the biggest worldwide anonymous online website to buy drugs, guns, order like hitmen, human trafficking. It was pretty awful.
Bad.
But one of the only reasons that he almost shut it down, because he had the idea and he was building it, but he almost shut it down until Bitcoin got invented, and he was like, "Oh, that's how I'm going to do it." And so, one of the big early adopters of Bitcoin or all these currencies it was just illegal activities. But I mean, that's that's the description of what it is. I mean, that's why it was invented.
Yeah. So you're just saying in this example, Ross had set up this company to do some pretty shady stuff.
Yeah.
But rather than launching it, because if he launched it, then it would be traced to him some way.
He got stuck at one point.
When Bitcoin was invented, then he was like, I could use Bitcoin to protect my anonymity.
Yeah.
But that's kind of what also gave Bitcoin a bad name initially, right?
Yeah. That's one of the big stories. And so the Silk Road, I think it was busted in 2013, and a lot of people worried that would be the end of cryptocurrency, Bitcoin and all the other ones, because that's what it was used for at the time.
Yeah.
We'll talk about places.
It's
you
definitely
can use it
advanced and more now.
Well, it's a lot different. So I think if you're going to recap, if you're going to be again at the golf course or party and you're talking about your cryptos, you just want to know that it was an online system for anonymous, decentralized payments. That would replace our current monetary system, our dollars.
Just think of it like when you travel to Switzerland, you have to take your U.S. dollars and you have to switch them to Swiss francs in order to buy stuff there. Bitcoin is more like another currency in another country.
Yeah.
It's just that it's starting to be adopted more globally. In fact, Japan recognizes it as an actual currency, don't they?
I don't know that. That would be a new fact to me.
I had seen that in a Wall
Street
Street Journal article. Like it's being recognized
as an official currency.
I don't know if any other governments have, but I believe Japan actually recognizes it now as an actual currency that they accept in regulation.
Yeah.
And so it's starting to make a lot more inroads than it did. And the reason people like it is because of that anonymity in it. And that obviously poses a lot of questions about how governments are going to want to regulate this, and how transactions are, what's it going to lead to? There's a lot of questions, and we'll get to what famous people kind of say, like famous economists and financial minds are saying about this kind of closer to the end. But
so to summarize, when you're having discussions about Bitcoin and cryptocurrency, I guess the thing to know is Bitcoin is one of many types of online anonymous currencies. There's over 1,000 that exist now. And the word itself, cryptocurrency, means two things. The currency part is obviously the monetary, spending value, like Bitcoin. And the crypto part of cryptocurrency just refers to the system that tracks and keeps a ledger of all the transactions.
Yeah. And if you're hearing people talk about how they get it, I think it's probably a simple way. But we're going to go into some detail here. But just a big overview. If you're like, this is all I want to know, just know that everything Ryan said is kind of a great summary of Bitcoin. The process of how it came about and how it's created. So you basically have a bunch of smart people, or dumb people, I guess, with smart computers. You have people with computers that are solving problems, complex math problems, and those complex math problems end up being awarded with coins.
Yeah.
And so if you solve a complex math problem with your computer, you can get awarded a coin. And so people literally, there's people all over the country and all over the world right now that have massive supercomputer systems.
That's crazy.
Or as small as a simple system in their apartment, and they're just trying to continue to be awarded with these coins. And there's a limited number of coins to that can be discovered. Right now, I think there's about 12 million coins that have been, we'll call it mined, and there's about 21 million that have been allotted that can be found. So they're trying to mimic the idea of physical gold. There's a limited amount of resources, and that's why the value of it can keep climbing, because eventually all of the coins will be in circulation and have been mined, and so that's what can allow it to increase in price. There's a lot of pros and cons to this, and a lot of them have similarities to other speculative, we'll call it other investments that might be speculative, such as currencies or commodities that might have limited value. And so that's kind of the general overview. And I think let's just talk a little bit, Ryan, about how people actually get Bitcoin in a little bit more detail. My explanation is a real simple one, but let's talk about a few other ways beyond just mining it that they might be able to acquire it.
Well, you can go buy it directly. So they have these online, they're basically like currency exchanges for cryptocurrencies.
Sometimes they call them online wallets. I see a lot, right?
Yeah, so you can go directly to one of them is called Coinbase. That's one of the big ones.
Yeah, if you go to bitcoin.org, they'll have a big old list of all the wallets that you can.
And it'll just allow you you can go grab $7,200 out of your bank account and buy one single online coin
through a wallet.
It's
kind of like a PayPal or a Venmo that deal only with dollars. I wonder if PayPal or Venmo will ever start allowing Bitcoin to be used.
Yeah, isn't that? I mean, it's so interesting, man. Yeah. So if you go on one of these online wallets, you can buy it. They can store it for you. The more interesting part about buying Bitcoin directly is that there's a lot of different ways you can store it. So you can go online and you can buy a Bitcoin, but then you can choose, because you're not really there's nothing physical, right?
Yeah.
It's all just it's passcodes.
You get a unique number that's assigned to your coin, right?
Yeah. And so you can download that stuff and put it onto I think they call it hard wallets. It's basically a thumb drive. It's an encrypted thumb drive. You can actually write it down on a piece of paper. Some people do that, and they'll put it in like a safety deposit box.
Yeah. As long as you've got your number or you've got you've got the physical code that you need to be able to activate your coin.
It's like a key. Yeah.
It's like a key to be able to use your coin at any number of vendors.
Yeah, it's kind of crazy.
To put it back into a wallet, right?
Yeah.
One thing to note too before we move on to the pros and cons is you don't have to buy a full coin. There's a lot of ways to buy partial coins, half coins, quarter coins. I mean, there's you can. There's a lot of different ways to acquire it physically. The pros of acquiring Bitcoin directly are there's very little fees because it's trading at the. You're purchasing it for the cost that it's on the exchange. There's no taxes, right?
Yep.
For
which is another big concern that governments are like, hey, how do we tax this stuff?
Yeah. So if you get paid for a good or service, I mean, there is no tax right now. You can trade it directly, person to person. Instead of through an exchange.
Yeah.
It's not regulated, so that's a pro for people that are trying to stay away from regulation or
law,
and it's totally anonymous except for the fact that your account number can be seen by somebody else. So
those are some of the pros.
What about the cons?
Yeah, the cons are interesting though. I mean, one of them is that the money sitting in your bank account today is FDIC insured. So the cash in your bank account, if something happened to the bank, I mean that's insured.
Yeah,
up to certain amounts. There's no. The downside to the anonymity and the lack of regulation is that there's no protection if something happens. So theft of Bitcoin is really common. Hackers, I mean, it's a huge thing for hackers to steal Bitcoin, and there's nothing, The
U.S. government doesn't recognize it as a currency. Although I did mention, I think Japan does at this point. It's a really volatile.
It's extremely volatile
currency.
Yeah.
Right. Like I said, it was less than a year ago. It's trading at under $1,000. Now it's at 7,100.
Like if it dropped $5,000 today, that would not be surprising. Be like, oh, Bitcoin dropped $5,000 today.
Well, that might be surprising. That might be
It'd be a shock.
It's possible.
It's totally
but
possible.
You would definitely have people freaking out.
Yeah, people would freak out.
But yeah, like it's very volatile and it moves a lot. Like Ryan said, in the last 10 days, it's 17% increase, and we've seen just as significant. The last year, though, has been nothing but up, and it's been a bull market for a year, and so it'll be interesting to see how much volatility might be in the future.
Yeah, and so some of these cons of storing it, though, I mean, there's a lot of stories of theft, and right now it's common. You've heard of like malware and viruses on your computer. You've heard of ransomware. You know what that is, where someone gets in your computer and holds it ransom.
Mm-hmm.
That's really common now, where you'll get some malware or virus in the computer. They'll scan for Bitcoin holdings, and they don't even have to know. They can see how much it is. They don't even have to know how to get into it. But what's happening is hackers are holding computers ransom. They see that there's Bitcoin holdings, and then they just rob people. And there's no recourse. It's not like someone, steals from your dental practice and then you could, prosecute or sue them. Like there's like no recourse for it.
Yeah. One of the big things that people talk about is that there's no underlying economic value. So it's not like an asset that produces anything. It doesn't, in that sense, it's similar to gold or any other currency. It's just a medium for exchange.
Yeah.
And it doesn't have the underlying economic value that makes it go up like a stock might, or a contract. Someone promising to repay you, like a bond.
Mm-hmm.
Those have underlying economic value where, this doesn't produce anything.
Warren Buffett talks about that. We'll talk about that in a little bit. But I mean, that's kind of the how do I buy Bitcoin directly? Those are the pros and the cons.
Tell me a little bit about a story that I heard about with this. There was it was like Mount Gox or something that you mentioned. I thought was interesting, where someone got like a massive amount of money stolen from them.
Yeah, so Mount Gox, this was a few years ago. That was one of the first big online wallets where you could go directly buy it and have them hold your Bitcoin. There was 800,000 Bitcoin at this Mount Gox online wallet, and it just disappeared one day.
It's crazy.
It just disappeared, and the CEO basically made a statement. Everyone was really mad, and he was charged with embezzlement, but they couldn't do anything, and so nothing really ever happened. But he basically made a statement. He was like, yeah, guys, there was, security flaw, so I'm really sorry, bummer to everybody. It was 800,000 Bitcoin, which at the time, it was like almost $1 billion. In today's dollars, that'd be $6 billion.
Yeah.
I mean, that's like a tenth of Bernie Madoff.
It's crazy.
But it just disappeared overnight. Just, people had gone and they had bought their Bitcoin securely with this online wallet. And then one day, basically everyone thinks, we're not going to accuse anyone here, but everyone thinks that the owners just stole all the Bitcoin.
Yeah.
And then
one fun story, you did a lot of research on this. One fun story that you found that I liked was the guy that threw away his Bitcoin in the trash can.
Really fun.
What happened?
A guy named James Howells, he had 7,500 coins on a secure, these were the hard wallets, a thumb drive.
Yeah.
That wasn't worth very much when he had them. He had mined these himself. So he had found them on the internet by having a computer solve these complex equations, and then was rewarded 7,500. Had him on a thumb drive, forgot about it, cleaned out his house, and chucked it. The value of that today it'd be like $56 million that he just threw away on a thumb drive. And there's
kind of a bummer. There's around Christmas time.
Like, sorry kids, I almost had 56 million. There's stories like this all over the place because people are keeping them on thumb drives. They're getting stolen out of laptops. Online wallets are, they're not secure in the way that like a bank would be secure.
You mentioned the guy that started the Silk Road. Like he was eventually shut down.
Yeah.
But then something interesting happened with the FBI agents that ended up ransacking his place.
It was actually a guy here in Utah, in a small town in central Utah. The FBI raided his place. He was one of the main distributors on the Silk Road for, I think it was cocaine. So they raided his house, and when they had him in handcuffs, 2 FBI agents sat on his computer, because one of the big things when they were busting the Silk Road is they were trying to get anyone who was logged in as an admin or as a distributor to like catch him while their computer's logged in.
Yeah.
So a lot of these guys had like one button and it would kill the computer. So they catch him. He's still logged in. FBI agent, they're going through the house. It's busy crime scene. One agent sits at the computer and he steals like 250,000 Bitcoin out of the Silk Road bank account. And at that time, it was fluctuating so much. Like this Ross guy who started it, I mean, he'd make like $100 million overnight because Bitcoin just increased, and then he'd lose it the next day.
Yeah.
So this FBI agent stole like 250,000 Bitcoin, and no one, like, it didn't matter when they saw it. At first, when they saw that it was left at their bank account, they're like, "It's Bitcoin. It's nothing. It's worthless. Like, who cares that Silk Road lost 250,000 Bitcoin? It wasn't like $1 billion moved from somewhere." They eventually caught him like 4 or 5 years later.
The FBI agent.
The FBI agent. There's 2 of them now. They're serving
so
prison
an
time
FBI
now.
agent stole money from
a criminal
thief.
Yeah, from the thief
while he was
Bitcoin.
trying to regulate it.
But the point is that no one cared at all that Bitcoin was stolen. It was like whatever, and so it just they let it roll.
So how else can I invest in Bitcoin if I don't want to like buy it and hold it directly? Can I do it any other way?
Yeah, there's a couple ways. You can buy. There's a couple funds. Maybe you want to talk about this for a minute. There's a couple funds that are tracking the. It's like an ETF, right?
Yeah,
it's tracking.
They purchase and acquire it in a trust, and so these ETFs, you'll be able to buy into directly. Just go online and search for an ETF for Bitcoin. Right now, I think there's only really 2 main ones: GPTC and BTSC. Those are 2 like ETFs. I don't recommend investing in them.
This is not investment advice.
That was not investment advice. You need to consult your own advisor. But if, as opposed to owning it directly, there's it's a different level of sophistication where there's another layer of protection that eliminates you from some of these theft issues. It does allow some professional level of management, so some people might prefer that. But some of the hardcore miners out there, they're not going to like to go and own that through an ETF.
ETF.
The whole point of Bitcoin was to avoid regulation and create anonymity. And
now you're signing up with the SEC. And
they
own my Bitcoin.
It's just ETF. Like it just kind of defeats the purpose for a lot of the kind of purists.
Yeah.
And then people have called me probably 10 times in the last month to buy it, and I say that you can play at your own risk in your own sandbox with your own computer and have a good time, but my personal opinion is that this is I wouldn't give advice around something like this any differently than I'd give advice around any currency trading or any commodity purchase. To me, they're just this is more speculation than it is an investment. And so if you want to bet on the Super Bowl, I'm not going to get in your way. And if you want to buy some Bitcoin, I'm not going to get in your way. But it's not an investment. But anyway, let's talk a little bit how people could mine Bitcoins. How can they discover them, and how do they find
this is
them?
the rabbit hole, though. This is like this is fascinating. So this is the crypto side of cryptocurrency. When you hear mining, so you were describing it earlier as computers. Now they have to be really, really fast, complex, and they're just energy-sucking computers that are solving really complex math problems and being awarded Bitcoin up to 21 million.
Yeah.
So the best way to think about this is like right now, if I were to send you, let's say I got my Venmo app, right, and I just Venmo'd you $20, Venmo kind of helps that transaction along, but it's recorded at the bank, right? It leaves my bank, it goes into your bank. There's centralized systems. The whole point of cryptocurrencies was to get rid of those centralized systems, so it's not one bank recording transactions. The way cryptocurrencies work is, think of it like an online ledger, and instead of one central organization keeping every transaction and updating.
People listening to this may not know what a ledger is.
Think of like the old checkbook days. Okay.
So think of it as a check register.
A check register.
Your old check register.
If you remember checks.
And then the new kids are
Some of the new students are like,
I don't know what either of those things
I think my parents had checks, right? But you would write down a debit or a credit if you had a deposit or you paid someone, and then update the balance.
Yep.
Well, the same thing's happening in cryptocurrencies, but instead of one central system that's recording it, It's literally thousands and thousands of people or computers that do it.
And everyone on everyone's computer has access to see every transaction.
So all these thousands of computers, every 10 minutes, there's a new block of transactions that happen. And these computers verify the transactions. They encrypt everything that's happened.
Encrypting means they put a code around it.
They take all the data.
It
It's called a hash, and it's this long thing. And then they add it to the chain of previous transactions. That's why they call it a blockchain. There's blocks of transactions that are linked in one huge chain that are encrypted with this code. And for a computer to add the next block, which kind of keeps the ledger up to date, it has to solve a really complex algorithm it's literally going through billions of iterations. That's why the computers have to be so powerful. It's going through billions of iterations to find this key that encrypts the next block and adds it to the chain. And when they do that, they get awarded in Bitcoin. That's how new Bitcoins come into the marketplace. That's what they call mining Bitcoins.
So you love this stuff and are clearly interested.
Great. It was a rabbit hole of YouTube videos, though. And it's really cool.
You could also say people with really powerful computers solve math problems and get coins.
That's exactly what happens. What's crazy, though, is, just a few years ago, you used to be able to do this on a laptop.
Yeah.
Now, the code self-regulates. So as computers got faster at it, because the code makes sure that these blocks only get added every 10 minutes, like clockwork. And so as the computers have gotten faster, the code gets more complex, more complicated. So now instead of a guy on a laptop in an apartment, you have people in China with warehouses and 10-foot walls full of supercomputers that are being cooled with like hundreds of air conditioners.
Yeah.
They're spending like $1 million a month in utility bills to try to crack these codes.
So basically, the more people that get involved and the more people that are trying to solve these math problems
and find more coins,
then the harder it is to find the coins.
The code self-adjusts.
Makes it more complicated.
Yeah.
And if people stopped looking for new coins and they were like, we got bored or quit working on it, then the code would get easier and easier to...
Yeah, it would self-regulate to get easier
because it wants people to find all the coins.
It needs the transactions to be recorded and put in the ledger about every 10 minutes. That's in the code. Mm-hmm. So what's interesting about this, the reason why I guess it's important to know how this works, is that's one of the huge questions around the value of Bitcoin. Because the reward for setting up these computers and running these systems and trying to add to the ledger, it's a self-regulating system, and the whole incentive for all these individual people to keep the ledger up to date and accurate is they get more Bitcoin. And so the big question about the value and the future of Bitcoin is what happens when there's no more Bitcoin to be rewarded for keeping the ledger up to date.
That's a huge red flag for a lot of the kind of professionals because they're like, where's the incentive?
How's everyone going to get paid? And they say maybe people get paid in fees and the fees will have to get, but that's one of the perks about an anonymous cryptocurrency is that there's no fees involved. People aren't taking huge cuts of transactions like
there's no intermediary.
And that was the whole point. So that's one of the big questions that remains.
Well, we talked about how crazy the returns have been on this. And I think I want to just talk real quickly before we wrap up about what some famous people think about it.
Yeah, these are
one of the more outspoken people
got a little flack
around Bitcoin is Jamie Dimon. He's the CEO of Chase. He talks about he's kind of bothered that he's been labeled as the anti-Bitcoin guy.
He's like I got to stop talking about it.
Like he has been pretty outspoken against it because like the first time, I think one of his big quotes was, if you're stupid enough to buy it, you'll pay the price for it one day. So that kind of got a lot of press, and he doesn't want to be viewed as this old school, like stodgy person that hates technology.
He kind of has a slight bias to not want banks to, have to be competed with a decentralized, unregulated currency.
So there's a little bias, that's at the heart of his argument. But at the same token, he makes a lot of good points. I think the one I heard him do an interview, and he just the kind of main overlying philosophy that he has is governments don't like things to happen with money that they can't track, trace, or control. And if you can't track, trace, or control it, then eventually governments will shut it down. Mm-hmm. And he's just saying right now the FBI and the CIA and the Federal Reserve and the U.S. government, like they just don't know how to shut it down or how to regulate it. They don't know what they're going to do, and it hasn't gotten right now. You have to say, as of this year, right now, where Bitcoin, his market value has really kind of skyrocketed. In the last 12 months, we've gone from less than $1,000 a coin to north of 7,000.
Yeah, it's crazy.
Now we're probably going to see some kind of response from in the near future is my guess. I think governments can't be silent about something like this indefinitely.
Yeah,
and that's Jamie Dimon's point. Is that's why he says if you're dumb enough to buy it, you'll pay the price for it one day, because as philosophically admirable as it might be to create this decentralized system and create a deregulated currency and have it be anonymous. I mean, all these things are interesting, exciting, and
but governments, I mean, they're not going to just.
But at the end of the day, like there's a reality to this, and that's if a government decides that they don't like it, then the thing's worthless. And and so you just have to. That's the kind of risk you're playing right now.
What I think is interesting. This is my thought as I've gotten more into this too, is the crypto side of cryptocurrency. This is what Jamie Dimon is saying too. He was saying, I don't really care about Bitcoin itself, the currency. You just express his thoughts. But he said, but the blockchain is a technology which is a good technology. He said, we actually use it. It's useful for a lot of things. He said, God bless the blockchain. The blockchain technology that we were describing, that kind of ledger system, it's used by Walmart now in tracking produce, from farm to hitting the shelves to know like quality of produce. There's diamond companies using the blockchain technology to track and verify and authenticate where the diamonds came from, and to from the mine to sitting on the shelves to authenticate quality. Yeah. So I thought that was interesting too. He's like, I don't care about the currency, but the technology is phenomenal and has a lot of future implications.
Yeah, and as with most things that get invented for the first or second time, they're not all bad. And sometimes there's good things that come out of of creations that don't always end up being sustainable or useful over the long run in a lot of different ways. But I would say that my personal opinion about this subject is probably the one I just want to make sure is clear. And I think Warren Buffett said something that I resonate with. He said, you can't value Bitcoin because it's not a value producing asset. It's a real bubble in that sort of thing. And it doesn't really make sense. This thing is not regulated. It's not under control. It's not under the supervision of any Federal Reserve System or any other central bank. And he said, I don't believe in this whole thing at all, and I think it's going to implode. So
the oracle has spoken.
He said it, but I'm not saying that it's not here to stay in some form. But it's going to have to go through a lot of iterations, and there's going to have to be some volatility around it. And I think speculating on this is similar to speculating on any other asset. And I don't think it's a lot different from, or not speculating on the asset. It's speculating on this is not different from speculating on any other outcome of any other random occurring event.
Yeah.
Because there's just so much unknown. I mean, in theory, all of it seems to have a lot of good underpinnings. I mean, that's the one thing. It's easy to just kind of throw Bitcoin under the bus as some random thing, but
some stupid.
The more you research it, the more you look into it, you'll see that it's actually very sophisticated, and it's not going to go away overnight. Yeah, just because even if a government says we don't like it, we're going to start regulating it. Like regulating this is going to be very hard. Mm-hmm. It's going to take.
Well, it's against the whole nature of the entire system.
Yeah, and you don't really know. There's so much anonymity behind everything that you just have to. You just all they're going to be able to do is they're going to be able to set really punitive penalties in place if you're dealing in it.
Yeah,
and then a lot of people still aren't gonna. They're still going to hide it, and they're still going to. It's still going to be floating around for quite some time. It's going to be difficult to unwind. But do you really want to be putting your money towards something that has that much uncertainty around it, and it's not a value-producing asset, and there's that much controversy around it? So when people are calling me and they're asking me about this thing, and should I do it, one of my first kind of discussions is kind of the same discussion I like to have around like taxes. Okay, so a lot of people want to find a loophole. Mm-hmm. To not have to pay taxes.
Yeah.
And they use a tax law that's been written, and they say, well, this is how I'm going to interpret it, and this is how I'm going to get around it.
Exploit it, yeah.
And I say, well, was that the point? What was the point of the law? Like, what was the point of the initial intent of the legislation?
Yep.
Like, why did they write this in? And if I think sometimes if you look at like the point of currency, you get the point of why a society has a currency that is
or why
traceable,
they regulate it. Yeah.
that's traceable to an individual, that's regulated. Why would they do that? I think it's pretty simple. And it's if you can do things, if you can accumulate wealth in an anonymous way, and you can transact in an anonymous way, then it brings out almost it allows the worst part of all of us to come out kind of at at the forefront of our personality.
Yep.
If you take, you were telling me earlier today how on social media or on the internet.
That's why we're awful online. It's why like normally not kind, normal human beings turn into monstrous, mean people online.
Yeah, because they don't have any accountability.
There's a level of protection there.
There's a level of protection. You don't really know me, and especially if they're anonymous.
Yep. Oh, especially then. Yeah.
I mean, people just go off the rails.
Just go to YouTube and read some comments.
Yeah.
And the dregs of society.
Yeah, you see that happening with black markets have grown as a product of this currency more than they ever could have.
Oh yeah,
through a regulated currency,
right.
Like even like cash. Cash at some level has limitations to it, and so I'm not saying everything about this has been bad. I'm just saying I don't really like the idea that deregulation and decentralization of currency is just the assumption that a lot of millennials are making, that it's just way better for society.
Yeah.
Like that if we get the government out of our money and lower the fees of of trading money through an intermediary like a bank.
Yeah. Which technology will solve that problem. Technology will drive fees down from banking.
It has.
Yeah, it already has.
Any financial intermediary, it's driven fees down like crazy.
Yeah. On that front, totally agree.
But I don't like the idea that an anonymous currency source is somehow going to be safer for society. Imagine a United States where every transaction happening around you, no one knows who's paying for anything.
Mm-hmm.
You don't know how to trace money anywhere. Yeah. Imagine how that would affect incentives, like how tricky it would be to know who's making your prescription drugs, like who's giving you medical advice, what forces are creating that advice, who's educating our kids, like who's educating our advisors, who's educating our professional community, who's educating our consultants,
funding it all,
who's funding all of this, and the reason currencies are regulated isn't because governments want to control you. It's because if people don't have accountability to how they spend their money, then it allows the kind of darkest parts of our personalities to come out. And I'm not saying I'm immune to that. I'm just saying if there's no accountability to how you spend your money and no one knows about it.
You'll be buying like illegal imported pizzas from Colombia that you're not supposed to have.
It can get wild. Anyway.
Well, I mean, that's it's one of the ways that governments are able to stop terrorism is to cut off money supply, because they can actually see the flow. I mean, they can see the flow of big amounts being transferred to and from different places, and they can stop terrorism because of money supply. Yeah. And that's a big concern and that happened with a lot of the black market stuff, where illegal weapons and hits on people, and bigger terrorist acts can be executed because of the anonymous nature of paying for it.
Yeah, and I think that affects my investment philosophy personally. I mean, I put my money in places that aren't always the highest return, but sometimes they reflect my values. Sometimes they reflect what I want to see happen in our economy. Sometimes I invest in a company or a person or something that I believe in that I think has underlying economic value. And I guess the whole genesis behind Bitcoin is it's a philosophy that people don't realize a lot of times when they're investing in it, that you're supporting something that you potentially may not want to see grow and thrive.
Yeah, right.
The outcome of supporting it and investing in it may result in an outcome that you wouldn't want to see anyway
happen in society.
So do you want to invest in things that are speculative? That's fine. I mean, betting on the outcome of the Super Bowl is one thing, but supporting a deregulation of currency also involved. You're
Could have
gonna
implications.
Yeah,
that
there's a
really
lot of
don't- yeah.
implications there.
Yeah.
So
I think that's the opinion we'd want to make clear is, you know, people are still going to speculate in this. I think, you know, the message we would tell clients is at least admit what's happening here. It's not an investment into something that has an expected return that's producing an economic value. You're not investing in something like that. That was Warren Buffett's point. Just admit that you're speculating and you're gambling, okay? So if it goes well, you can be honest about why it went well. You know, it was a lucky guess in something that was highly speculative. If it goes poorly, then you could say, I gambled, you know, and make that distinction. There's a guy named Josh Brown. He's known as Downtown Josh Brown, or the Reform Broker. He's an investment advisor in New York. Anyway, he was talking about Bitcoin, and he said, so I'm not sure that the thing gets tamed so much as turned into yet another mainstream trading vehicle that people of all levels of experience and sophistication will use to act like children.
yeah,
He says, my guess is that the initial impact will be bullish, but like everyone else, I'm just making this up as I go along.
yeah. I think that's what we'd like everyone to take away from this is
So good.
all of us are kind of making this up as we go along, and we don't really know what's going to happen with it.
We'll update this Bitcoin episode in like 3 years. And
Yes.
tell you what happened.
And
3 days.
3 days, maybe.
3 days, and we'll get back. It's
Next week.
Yep. So, but I do like how he says that it may not be likely that this gets tamed, right? Or really turned off, and that's what I was trying to say earlier. It's gonna be a slow process to sort of rein this thing in. It's just too sophisticated to just shut off overnight, and so it'll just be interesting to see how many people act like children with this, and
Love that he said that.
versus how many people actually. I like that he said it's going to be turned into a mainstream vehicle that people use to trade and speculate around.
And act like children.
Yeah.
Yeah.
We're seeing that right now. And that's the thing. I mean, it didn't take long for the public markets to create products to capitalize on it.
He in that same article that quote came from, he's talking about, I think it's the Chicago Exchange that's trying to create some kind of futures investments around it, about the future price of it. So acting like children and making it up as we go along. That's basically the takeaway from Bitcoin today.
Thanks, Ryan.
Okay, so we invite everyone to watch our channel on YouTube. We have the Dentist Money Show that is now streaming on YouTube, which is really exciting. We also want to remind everyone that we are the official podcast. We're really excited about this. We're the official podcast of the Greater New York Dental Meeting that happens this November. It's actually November 26th through the 29th, right after Thanksgiving. So if you're in the area attending the show, we'd love to see you. We'll have our booth there. The Dentist Money Show will be doing interviews with a lot of different people. So love to see if you can stop by. And to schedule your free consultation with us, you can go to dentistadvisors.com. There's a link at the top of the page with a little calendar. You can pick a time that works for you. We'll talk about your situation and answer any questions that you have, and we'd love to hear from you. And as always, you can just give us a call directly at our number, which is 833-DDS-PLAN. And thanks, everyone, for joining us again.
Thanks, Ryan. Carry on.